services today. So by way of table of content, this is what we'll be speaking to based on the ICAN study, AAA study text on audit-related services. So we actually looked at an introduction of a referral in Chapter 2, the regulatory environment, and also Chapter 1, audit and assurance services. But then we'll go a bit into detail with Unit 1, review engagements, Unit 2, agreed upon procedures, compilation engagements, Unit 4, investigations, Unit 5, liquidation and bankruptcy, review the chapter, then we'll look at our quiz very, very quickly. Okay, so what is review? What are review engagements? For example, first you must understand what audit is before you understand review engagement. So audits are statutory, but review engagements may not be statutory. So statutory and non-statutory services have to be explained in the light of audit. So an assurance engagement is providing high-level assurance on whether financial statements gives a true and fair view. We should be aware of this very important statement by now, true and fair view. The trueness means substantially material, there are no material misstatements. And fairness means the performance and position of the company are well stated. So we should be aware of these statements, very important statements when we are writing AAA, to always bring to bear when we are writing. So when you speak to audit, key statements like true and fair view, high-level assurance on whether financial statements give a true and fair view should be written in your points. So that's speaking to audit. Then audit-related services now capture issues of review. They are audit-related, but they are not directly audit services. So these do not provide the same high level of assurance as audit does. Some do. For example, review of data provides moderate assurance that information are free from material misstatements, but they are not direct audit services. They are audit-related services. Like audit has high level of assurance, but review of data provides moderate level of assurance. Then another audit-related service is agreed upon procedures, where a practitioner follows client-specified procedures on this is what I want you to do. Help me look into these areas. Help me, for example, work on an acquisition or a target company who want to buy. So as a professional, help me. So agreed upon procedures are specific areas, reports of factual findings, and there are no assurance provided in this area, unlike that of the review of data. Moderate assurance is provided. For agreed upon procedures, there are no assurance provided. And compilations speak to practitioner, prepares information, is not audit services, and uses account expertise, and it has to do with providing no assurance, because you cannot be a maker and a checker at the same time. So in compilations, maybe a company came up and don't have the requisite experience or expertise to prepare financial statements, and they say, okay, let's employ a firm to come and prepare that financial statement. So they employ an accounting firm and they send in maybe their unit that is in financial reporting to provide accounting services for that company. Those are areas of compilation, but that same firm cannot audit that service because they can't be makers and checkers at the same time. So in most cases where big accounting firms are provide services for compilation in preparing financial statements or tax returns for clients, they normally give it to another company or another audit firm to audit where it's necessary or is needed. So compilation services are practitioners preparing information for a client. So these are examples of review engagements, reviews of data, agreed upon procedures. Compilations are examples of audit-related services. So the types of review engagement include a practitioner reviews the financial or other information. Less detail are provided in audits and limited assurance engagements. So these are types of review engagements, and clients engage auditors, accounting firms to provide this. We also have attestation engagement. The practitioner affirms or vouches for something, for example, procedures performed as prescribed based on regulations or policies of the land or the jurisdiction where they are domiciled. So looking at the US, for example, attestation engagements are very prominent in the US, where the rule-based approach of accounting or audit is employed. So attestation engagements are predominant in the US very, very much. Okay, we also have direct reporting engagement, another form of review engagement, where the practitioner provides a special report with limited or negative assurance after independent examination of information prepared for another party. So what does direct reporting engagement really mean? Speaking to negative or limited assurance. Now, there's a practitioner who is the auditor that is preparing the report. After he has provided that information prepared by for the client, the practitioner is the auditor, is preparing information from the client. He does that and say, okay, this report I've prepared for you has limited or negative assurance after independent examination of the information. Now, he's not giving assurance because it's not an audit service, it's a review service. It's not an audit direct service where you provide high-level assurance. It's a review engagement where you provide limited or negative assurance. Meaning is not needed. High-level assurance is not needed that they have either adhered to laws and regulations of IFRS or GAAP, or laws and regulations that are providing a true and fair view of financial statements. So it's not needed, and that is why the direct reporting engagement speaks to limited or negative assurance prepared for auditors or prepared by auditors for a client company. So that's direct reporting engagement. We also have another example of review engagement speaking to due diligence engagements. For example, common direct reporting engagement involving inquiries into accounts, organizations, or activities. It's common in mergers. When a company wants to merge or take over another company, they engage audit firms to help them provide due diligence engagements to be able to look at those companies with their expertise and provide advice and reports on whether they should take over or they should merge with that company, hopefully to culminate in a good synergistic, profitable merger or profitable acquisition. So due diligence engagements involves this. And what are the objectives of review engagements? To gather relevant information about, the due diligence engagement. The objective is to gather relevant information about the target company's operations, their financial performance and position, and also future prospects and the business environment generally. And that's what the due diligence objectives are all about. And the procedures include inquiry into the management team, the key employees, and possible third parties. No test of controls or substantive testings are required like it's done in the typical audit work, because it's not an audit work. It's about inquiry and also providing expertise and information on the prospects and how the company is, to look at their profitability and the business micro and the macro environment. So, and also the main objective is also to provide information to decide on desirability and the reasonable cost of taking over or merging with that company. Adverse report may lead to abandonment or price reduction. So where there is a favorable report, it shows that the company they want to take over or merge with is valued and profitable. But where there's an adverse report, it leads to either abandoning the project to take over or reduction in the price or value of that company. And the items to investigate for this kind of engagement speaks to financial performance position, like we said, looking at historical data, what they've done in the past, ratios and forecasts, operational issues, their contracts, their labor turnover, warranties, management representation, their former auditors report and what they've responded to auditors, identification of their intangible assets, what is their goodwill, and benefit costs of the takeover. So these are essentially generally what auditors look at in a due diligence engagement. Also, the benefits of using. Okay, yes, please. Yes, please. Yes, please. Go ahead.
You have named quite a number of review engagements.
Yes.
Can we name them one by one, so that at least I'll follow when, okay, you said this one, you said that one. is there a list of the engagements and review engagements?
Yes, there's a list. So starting from the audit-related services, you can start from review of data. So that's one. Yes. So you can see from on the screen.
Audit-related services.
Yes, audit-related services.
Review of data.
Yes, review of data, number one.
Okay.
Let's go to number two. We spoke to agreed upon procedures, number two.
Okay.
And number three, compilations. Did you catch compilations? Yeah. Okay.
Yes, I have.
Okay, then number four, attestation engagements. And we have direct reporting engagement. Direct reporting engagement, that's number five, which you are currently speaking to. So direct reporting speaks to the issue of mergers, and we're trying to elaborate. We are looking at the main objective. We're speaking to the benefits when you interjected. So this is where we are, the benefits of due diligence engagements.
Direct reporting engagement.
Yes, yes. Okay, no, we are speaking to due diligence engagement. So we've spoken to direct reporting engagement. We said it provides a special report with limited or negative assurance. Then this due diligence is the one that speaks to mergers and takeovers that we are currently talking about. So that should be 6, right?
This is the 6th one. Due diligence is the 6th one.
Okay, yes, that's the 6th one. Okay. So this is the 6th one. So we are on the 6th one now, and we are currently at the benefits of using audit firms to do this review. So like we spoke to the fact that it saves management the time and provides experienced professionals with information and reassures shareholders and investors that somebody independent and experienced is doing the job for them. So those are the benefits of using audit firms to do due diligence engagements. So we also have due diligence reports, which is for agreed, a format agreed with clients in their engagement letter. So there are due diligence reports that are prepared based on these engagements that involve due diligence or into mergers and acquisitions. So there's a standard format that is used, and the format is agreed with the client that this is how you report to us. And in the engagement letter, which states what is the terms of reference between the individual preparing the report and the third party, which is the client, they agree the terms and the format in their engagement letter as they start the work. So typically it includes this format: introduction, then there's an executive summary. The executive summary shows the key concerns, and there's a main section where it speaks to analysis of financials, audit issues, legal or corporate governance issues, strength, weakness, opportunities, and threats of the target company or the company they want to merge with. And what are the obligations of those companies, financial and non-financial? Who are the key stakeholders and employees of the company? And the appendices shows calculations. So you can see generally it typically looks like our case study report, but it has one or two differences. But generally the format is the same. You introduce, then you have an executive summary to summarize the main points before you go to details. So the appendices are supporting documents for details and other inquiries. So typically this is the format that is generally used for due diligence reports. So the International Standard on Review Engagements, ISRE 24000, speaks to the objectives of review engagements. So these standards are always tested to some extent. They are tested in the AAA paper. So you need to be aware of some of these standards and how they appear in the case study, the AAA text. So we need to obtain the objectives of this standard in review engagements, speaking to Unit 1, is to obtain limited assurance, primarily inquiry and analytical procedures that financial statements are free from material misstatements to express a conclusion. So you need to be aware of this standard, ISRE 2400. The objective is for limited assurance and inquiry and analytical procedures that financial statements are free from material misstatements to express a conclusion. So there is the practitioner. The practitioner is the auditor, and his responsibility is display integrity, objectivity, professional competence, due care, confidentiality, and professional behavior. The same professional code of conduct for chartered accountants. And the procedures include understanding the entity and the industry you are reviewing. What are the accounting policies, the material assertions, board minutes, completeness of records you are reviewing, perform analytical procedures, compare patterns, compare like terms, compare relationships, and also discuss with auditors, written representation, discussion with auditors, written representations, having all your correspondences documented, assessing accounting policies, subsequent events, overall review, and related parties. Yes, please.
You know, all these things, this review engagement you're talking about is all these things you've mentioned just now.
Yep, exactly.
All this review data, agreed upon procedure, compilation, all of them. And
yes.
it's in and the standard is ISRE 2400.
Yes.
And the objective is what you are calling out now.
Exactly.
Yeah.
Exactly. Yes, please.
Okay. It's fine.
Yes, please. Yeah. So let me go back again. ISRE 2400, because he may come up with it and be wondering where is this from. And I think he has tested it in one or two past questions. So the objective is to obtain limited assurance, but to ensure that financial statements are free from misstatements or errors, and whatever decision they want to make based on the specific engagements they are reviewing, they should provide accurate data that will help them facilitate that decision making. And we looked at the job or the qualities of the conduct of the practitioner, who is the auditor doing the job, and the procedures, and we spoke to what and how they are to do the job. They may be following some pattern with that of the audit work, but then the end result and the outcome is not audit work, but it's almost the same procedures that is ensured. So we speak also to related parties and considering fraud and NOCLA. What does NOCLA mean? NOCLA means or refers to actual or suspected non-compliance with laws or regulations. So take note of that. That acronym is non-compliance with laws and regulations that an accountant or an auditor becomes aware of during the course of their work. So they could relate to fraud, tax evasion, money laundering, environmental violations, breaches of health and safety regulations. So take note of that. It's an acronym that is popular: non-compliance with laws and regulations. So those are areas they review and they bring
to the CSME.
Okay, you saw it in CSME, right? Okay, that's
when the auditor will declare NOCLA.
Yes, declare NOCLA. Fantastic, you're aware of it. That's very good. So he needs to communicate, assess the impact, and consider external reporting. I also consider going concern assessment if the company can continue to perform in or operate in the foreseeable future. Also, he needs to extend the scope where need be if misstatements are indicated. So reporting at the end of the review engagement entails that they are confident and have this level of comfort that no matter have come to their attention, and the report gives a clear expression of limited assurance. And the example of the report provided shows like matters come to our attention that there's no material misstatement. Saying no matters come to our attention that there's material misstatement, or reporting could be similar to that of qualified audit reports. So if matters have come to their attention, it shows that they will qualify the report. We'll see all those reporting formats in chapter 14, I think, speaking to reporting. And that qualifying somebody's report means that there are issues. Unqualifying a client's report means there are no issues. So qualified reports is covered in ISA 705. We'll be looking at that in reporting, chapter 14. We'll also describe matters and assess the impact of the matters that have come to their attention, and they are material and pervasive in nature. We also need to distinguish between material misstatements and the scope limitation in the opinion. So for example, a qualified conclusion provided is a perfect example. So matters coming to an attention reporting to, okay, I think I'm duplicating the slides here now. Now, another standard apart from 2400 is ISRE 2410 speaks to review of interim financial report information performed by the independent auditor of an entity. So there is the interim and there's the final. So 2410 speaks to financial review of interim financial information performed by the independent auditor of his client company. So number one, it deals with the review of interim, which is mid-year financial statements by the company's external auditor. So the external auditors are doing statutory job, but the independent auditor could be working on the interim before the full year review by the external auditors. During this review, general auditing principles apply. Reviewing firm is usually done at the year end for statutory auditors, and they apply or comply with ethical requirements, quality control, professional skepticism based on the engagement letter, and they prepare sufficient documentation. So the procedures for the review of interim financial information based on ISRE 2410 is to understand the entity's environment, internal and external, and to assess the misstatement risk and select appropriate procedures. So the internal controls is the internal environment, which they actually concentrate on, not really the external environment, because they are not helping to look at threats of the business. They are looking at the internal controls of the business. So they also perform inquiries during this review and analytical procedures to arrive at sufficient conclusion on whether the IFIs, which speaks to the internal controls of the company, and it's very important that this is reviewed based on the agreed upon engagement during the job that is done. So we need to understand that the performance of these reviews are based on the agreement between both the practitioner and the audit, the client, the audit clients. So it's also clear that independent audits could take this form, and it's good to help facilitate that. They may give negative assurance, not a high-level assurance actually. And the performance additional procedures, if matters come to attention, should be brought to the fore to management to handle, and also check if agreements reconciles to underlying records. This is key. So during the job done, we need to be sure that the engagements are adhered to and they are practical, and ensure that the scope are covered very, very adequately. We need to also evaluate during review engagements uncorrected misstatements individually and aggregately, and obtain written representation from management to validate their own responsibility and position. Also, the interim financial information or report is prepared by management. That's to show this is their responsibility, and the materiality of uncorrected misstatements is fully disclosed in the report. This is very, very important. And also ensure that other information with the interim financial information is also consistent, and also reporting on the review of internal financial information is to ensure that the written report with specific elements tied to addressee identification of the interim financial information management's responsibility is in line or in place. The auditor's responsibility and scope of the reviews, his inquiries and analytical procedures substantially less than audit, where this one has no opinion. There should be conclusions, which is the negative assurance, the date, the location, the signature of the auditor, and for example, an unmodified report provided, or a qualified or an adverse opinion if the interim financial information not prepared according to the framework has ensued. So if the scope and limitation is to communicate to management and governance and consider the ability to issue a report. And also the modified report for a going concern, uncertainties and inconsistencies with ISA 570 is also key to these reports. So generally, that's what engagement, review engagements speak to, and it's a bit lengthy because he tests this once in a while, and we need to understand that they are audit-related services, but they are not assurance or audit, direct audit engagements. So that's a long shot, a bit of a long shot for that first unit. It's quite long and is frequently tested in most diets. So if we don't have any question, let's rush to agreed upon procedures. Any question? Nice to have you, Rufiat. You're welcome to the call. Any question on review engagements? Good evening. You're welcome.
This review engagement now, it's
yes.
It's a combination of everything concerning audit-related services, right?
Fantastic. Yes, absolutely.
So now you are going to agreed upon procedure. You are now handing them one after the other, right?
Yes, in detail. So we looked at review engagement.
So what you just gave was overview of everything.
Of everything, yes. So now I want to enter the detail of agreed upon procedures as a special header. Exactly.
We are not doing compilation, specially attestation engagement, direct reporting engagement. We're not doing that.
No. Those ones are not really detailed. So we look at compilation engagements in detail in Unit 3. So these two are very important based on the examiner scope. Yes.
Okay.
Yeah. All right. Thank you for that question. So let's see, agreed upon procedures speaks to client specifics, the procedures for an accountant to follow. So for example, a particular unit and a process, a client wants the accountant to report on. So the accountant or the audit firm reports on factual findings. It's not assurance based. So maybe in preparing financial statements based on IFRS or GAAP, he can be agreed upon to say, okay, do this job for me. And it involves user access to procedures, findings, then they draw a conclusion on their own job or their own observations they find out. So it's specifics, and the accountant or the auditor has to follow that procedure most of the times. And the report is restricted to those agreed on the procedure. So the terms of engagement or the engagement letter states unequivocally that this is what we are asking you to do based on agreed upon procedures. And we have the International Standards on Related Services, ISRS 4400, speaks to this.
That's audit-related services now.
No, not yes. International Standards on Related Services.
Not audit-related services.
No, not audit-related services. ISRS, yes. So we have ISREs and ISRS. So the report is restricted to who is agreed upon, and this ISRS speaks to this engagement graphically. So the engagement terms is generally in the engagement letter as normal audit or normal audit-related service. There must be an engagement letter that stipulates what the client is to do and what the auditor is to do, and the nature and the purpose, whether it's not audit, whether it's review, whether it's procedure, whether it's information applied to whatever agreed upon procedure it is, it must be documented in the engagement letter, and the kind of report to prepare, where it's limited to, and the distribution. So the processes are similar to audit planning, documentation, evidence, conclusions, and reporting. It's the same process, the same procedure followed, but less work due to no assurance. If you are having assurance services, you have to go into detail to provide assurance. You do test of control, detailed review, analytical procedures. But the reporting on these agreed upon procedures entails report of factual findings, which includes you have a title, you're addressing it to the client, then the identification of the information you were asked to. So the statement of agreed procedures based on ISRE 4400 speaks to compliance, statement of no independence, if it's relevant to what is agreed upon, what is the purpose of the procedure, the list of procedures performed, the description of the factual findings, whether there are errors or exception, and statement of no audit or review or assurance. So the statement that additional procedures might reveal other matters, and the statement of report restriction is what agreed upon procedure engagement is all about. It must be a statement of scope that, okay, you have limited me to this scope or this process or this procedure to work on. And the example of the report is provided to the auditor to perform. So agreed upon procedure is special. Sometimes clients will ask auditors to come and prepare tax returns. It's an agreed procedure. Just do our tax filing for us. It's an example of an agreed procedure. So it permeates around any process or procedure you feel you need external expertise. So auditors or accountants are engaged from firm to come and provide those services based on specified terms. So the example of the report provided would give the accountant a leeway on how to report on this. I believe this is a bit simple and clear. If they ask you to write short notes on agreed procedure, you should be able to write something looking at this. All right, so any question? This one is a short area, so any question? It's like Rufiat didn't speak. Or Rufiat, you're welcome to the call, or she has gone off. Rufiat, are you there?
Yeah, good evening, sir.
Okay, good evening. You're welcome.
Did you respond? Good evening.
Yes.
No, then you asked a question, so I didn't want to interrupt. That's why I didn't unmute.
Okay.
Yes, good evening.
Welcome. Nice to have you.
Same here.
Yeah.
How are you doing?
Very well, thank you.
Yeah,
It's like, Julie is far from the mic. We are hearing you from afar.
Yes, yes.
Can you hear
It's
me
better.
now?
You're close now. Yes, you're close now.
Yeah.
Okay.
Yes.
Thank God
Maybe I
it's
did not raise
weekend.
my voice.
Okay.
Yeah, started.
Yes, sir. Time
Okay.
to marry our books. Seriously, I'm really looking forward to the exam. This time next week, this time next month, I'll be resting. Knowing
Yes.
that.
You're looking forward to the exams. Let me see, finish reading then. Wow.
No, like you know that feelings like you're anxious.
I'm telling you, I just can't wait for this to be over. You're right.
You can't just wait for this to be over.
My short. Let me not talk.
I pray God guide us through and bless our efforts.
Amen. Amen. Oh my goodness. Hi. If not for me, for our teacher. I'm telling you, he is teaching so much, honestly.
Seriously.
Thank you so much.
Like,
you so much.
God will just reward him, because if we start to pray now, we don't know. We don't know where it's hot, but God sees everything.
Amen.
Yes, so
prayers
and this is I've not seen such.
This is not something that you would see.
Not see it anywhere.
You see training everywhere, but most people are after the money. Even my husband was commenting. My husband was commenting. Was it yesterday? He said he so much loved this our lecturer that he loves the way he teaches.
Thank you so much. Thank you so
Seriously,
much.
I was like, oh wow.
And it's
because
free. Your
when
time.
I'm in class, I used to put it on speaker.
Okay.
So he do listen to it. So he just made that comment out, and I'm like, oh, so this man is hearing everything, like he's paying attention.
Of course, they always do. Yeah.
God bless you.
We are very grateful. God bless you, sir.
Thank you so much. You guys are always motivating me with these kind words. Thank you. I appreciate that.
Oh, but it's the truth.
Go ahead.
Like, especially in Kano, like Prof. In short, I don't know, you guys, the way you just give out your all to make sure that we pass.
God will help us.
In Kano, the people in Kano are just wonderful people.
And make it all worth it.
Amen. Thank you so much. In fact, the joy is when we hear you guys have passed, we'll be so happy. That's the joy.
Yes, I know. That's the joy of every teacher. That's the joy of every teacher. And God,
exactly.
Yes, sir.
Thank you so much. I appreciate your kind words. This is really motivating. Thank you.
Okay.
You're welcome. All right. So let's look at compilation engagements. That's the third unit on the audit-related services. So the accountant prepares for compilation engagements, financial statements. So agreed upon procedures are not necessarily financial statement preparation. They may other areas, but then compilation, as the word means, you compile, speaks to financial statements. So in the exams, if you see something like that, just let it resonate with you. Compile. It comes to preparation. So where a client does not have maybe a finance department or a chartered accountant, most companies may not have, or they've not recruited, they are startups or just growing. They engage professionals in audit firms to prepare their financial statements. So compilation engagement is a practical example of that. And it speaks to information. It's not audit related. It uses accounting expertise. It has no assurance. So you are preparing financial statement for the firm, and is also subject to scrutiny, because most public listed companies, public interest entities will need those statements to be audited. So where an audit firm maybe prepares it from their financial reporting unit, another audit firm will also audit it. So generally speaking, the compilation engagement speaks to preparation of information. It could be tax preparation also. It could be compliance engagements, anything that has to do with compiling something to remit or prepare for another review speaks to compilation engagement. It involves collecting and summarizing information. Compilation report may be issued, but is not always required. So where you have a financial statements preparation, you don't need to prepare a report. Just go in line with either the GAAP format or the IFRS format, and that's your output for your clients. So there are no assurance on compiled information, and generally compilation engagement has no assurance provided. But clients gain some assurance from accountants speaking to compliance with professional codes, due care and competence. So for example, filing of tax returns is a compliance engagement. So you have taxes you want to file, you call or engage a firm to come and compile it for you so you can remit. So you can assure him that, okay, based on these percentages, these calculations, we're going to remit your taxes, whether payee, whether company income tax, whatever form of tax it is an example of a compilation engagement. So the International Standards on Related Services 4410 revised speaks to how these engagements are to be followed. So there are standards and standardized formats to follow. So ISRS revised for 4410 speaks to this. Generally, there's first an engagement letter. What are the terms? When you hear engagement letter, is the first documented procedure for engaging the client and the auditor, confirming that it's not an audit review, and you don't need to disclose error or fraud. It cannot disclose error or fraud because you are preparing financial information, and the client is responsible for the information accuracy and completeness. Of course, you are not the one that prepared those transactions. You come and take the information and post it if it's financial statements you are preparing. The intended use or distribution is based on the applicable framework, speaking to either GAAP or IFRS. And there's a clear objective and scope. The practitioner is responsible for ethics, expected report form or content at the output. So there's planning and documentation required. The practitioner, who is the accountant, needs adequate knowledge of the client's business, the accounting system, the package, the ERP, whatever it is used for record keeping, and the applicable framework to use for the financial statement or whatever it is he's compiling. So if information is provided unsatisfactorily to the practitioner, he requests for correction. And if there's no correction, because whatever it is given to him is what will determine the output, he may need to withdraw if he is refused information, because our integrity as chartered accountants is at stake. So whatever is given to you is what is the output. Like the normal giggle, we say garbage in, garbage out. So if it's garbage they give to you, it's garbage you always prepare. And the public or whoever is using the financial statement will always see the outcome and not the input. So the output, if is wrong, the the input is wrong, sorry, the output will always be wrong. And most accountants decline this engagement to ensure that their integrity and their expertise is not jeopardized. So the practitioner must also obtain management's acknowledgement of responsibility for the final information. What does that mean? It means that whatever is the output, we are responsible for it. I'm just preparing based on my expertise. You give me the information. No matter how satisfactory I see, you are still responsible for the final information. So based on the ISRS 4410 revised, the written report has a title. It's addressed to the client. There's a statement of compilation based on management information, also description of the management's responsibility as usual, identify the framework, state it in the management letter that this is what you have to use, identify the financial information, also description of the practitioner's responsibility, that is the auditor, what is he to do, and also description of the compilation engagement. What do you want me to do? What is the output? That should be provided in the engagement letter. Also explanation of no verification or assurance, because you can't be a maker and a checker at the same time. So it's a maker job. You are preparing financial statement or compiling tax returns. So you are not doing any checking, you are not reviewing. And the explanation of no audit opinion also should be stated there, and the conclusion and the explanation paragraph for special purpose framework. Any special purpose job that is to be done on compilation engagement should be stated in the engagement letter. It should be dated, and the practitioner's address, the auditor or the accountant's address, and the signature should be appended on the report. So this is an example report format provided for a compilation engagement. Okay, so that will be it for compilation engagement. Do we have any questions? We have 2 more units to go. Any question? That will just review the last 2 units in the next 10 minutes. Then we'll go through our quiz. Don't forget, you guys are owing me 100%. So I think today I will have to take those takeaways. So any questions? Okay, I don't think there's any. All right, so let's look at investigations. The absence of any, I believe, is a bit clear. Investigations. Investigation speaks to accountants involved in either forensic or audit failures, ethical breaches, money laundering, bankruptcy, government spending, or value for money investigations. So we're also involved in these kinds of jobs, and the laws and rules depend on the type of investigation and legal authority involved. So investigations are also part of the areas accountants are providing their own expertise and services to organizations. So investigations and the International Audits and Assurance Standard Board, they don't have any official definition in the international standards on auditing, but the IASB, International Audit and Assurance Standard Board Handbook, refers to investigations in context like audit failures, forensics, firm complaints, deficiencies that are material, non-compliance, audit exceptions, regulatory investigation, illegal acts like money laundering. All these areas that could be investigated, and that's what the ISB handbook speaks to. So there's a comparison between the statutory audit and investigations, a table comparing the duties and responsibilities, qualification to act, appoint a body, and duties set by the reporting line. So these are the general terms of engagement of investigations compared to audits. So audits are providing assurance services, but investigations are providing services related to a specific investigation, and it has reporting line. So the key differences between audit services, regulatory audits, and that of investigation is audit services are assurance services speaking to providing an opinion on financial statements, while that of investigation are specific to a finding or a happening that has a risk that has crystallized or something that has happened and it needs to be investigated thoroughly. So the duties of statute and appointing body is what differentiates audits and investigation. And we have the reporting line for audits is to shareholders of a company or an organization, and investigation is the appointing body. Whoever appoints are the recipients of the report. So what are the stages of an investigation? So when a practitioner is engaged for investigation, you have to accept by evaluating the offer. It's similar to the process of audit and assurance anyway, because he must be competent and experienced. He must have the staff, the time, and the ethical considerations to accept the job. So these are the conditions. And after accepting, the next stage is to carry out the work, field work, investigate the work based on the subject matter. After that, he needs to report and form a structure based on specifics to the circumstances of the issue. He also may follow ISRS 4400, which is agreed upon procedures, or assurance report standards, which consist of core components, having the addressee, where the report is going to, what is the caveat, what is the report on, his responsibilities, the work performed, and his conclusion. This is the reporting format to follow. So that's it about investigations, and that speaks to how a standard procedure or format should be followed for investigations. Okay, so the last one is liquidation and bankruptcy. That's the last unit under audit-related services, if we don't have any questions. Audit-related services, the last unit is liquidation and bankruptcy. What does liquidation and bankruptcy speaks to? Generally, the winding up of a company, bringing to end its going concern, is what liquidation and bankruptcy speaks to. The company comes to an end. So by way of liquidation, assets are realized, creditors are paid off, the remaining money are shared to shareholders. So that's what liquidation generally speaks to. Assets are realized for the company remaining, the creditors are paid, and the money is shared to shareholders. Dissolution speaks to the company's name removed from the CAC or the country body's register. That's what dissolution speaks to. That means the company as a legal entity ceases to exist. And that's what liquidation speaks to. Dissolution speaks to and is related to liquidation. Also, a solvent winding up speaks to a company can pay creditors in full. That means they are solvent. But an insolvent winding up means the company cannot even pay creditors in full. And creditors have the first claim to the company assets before the shareholders. So there's solvent winding up and there's insolvent winding up. So being able to pay creditors in full is a solvent winding up, while insolvent winding up speaks to creditors not being able to pay in full. So what's the difference between insolvency and illiquidity? Insolvency means net liabilities are a result of the assets that have been realized from the company. While illiquidity means short-term cash flow problems. That means inability to meet short-term day-to-day obligations. So insolvency, net asset is speaking to the total asset less your net total liabilities. If it's positive, the result or the product of that deduction from total asset and total liabilities is the remaining asset that will be realized to sell off or settle creditors and shareholders. But illiquidity is a temporary or short-term issue, and a solvent company can be illiquid because insolvency may be a long-term issue where you are having issues with your assets or your liabilities going above your assets, while illiquidity is a short-term one, and that's why it speaks to the fact that a solvent company can be illiquid. So what are the drivers of insolvency? Overtrading, selling more than you are earning, long-term lack of profitability are drivers of insolvency. Having losses consistently would lead to insolvency. So what are the practical steps for liquidity problems, potential insolvency? Winding up, trying to save the company or administration, asking auditors for help. So insolvency speaks to winding up And these are potential practical steps to liquidation or liquidity problems. Bankruptcy is legally declaring your inability to pay debt, either as a person or as a company. It often follows insolvency. It's governed by the Bankruptcy and Insolvency Act of 2016, which is the repeal and reenactment bill in Nigeria. So winding up is either voluntary or compulsory. Voluntary is without court intervention. The company or the person decides to file for bankruptcy or wind up voluntarily, while the compulsory one is a result of court order. Court has ordered the company to wind up either by creditors petitioning the company for inability to pay debts, but there's a court order that results to compulsory winding up. So the liquidator appointed to realize assets and pay creditors first, distribute the remaining surplus to shareholders is what liquidation processes are all about. So there's also a receivership, person appointed by the creditor of the company or the court to realize and secure his or her assets or secure debts that is owed by the company. So the receiver acts in the creditor's interest, winding up not necessary for appointment, but the receiver's powers in debenture holdings and some specific long-term liabilities are paid back to him. So the surplus is paid also to the liquidator for his services provided. So once a creditor is paid, the receiver allows the directors to resume control or hands over the liquidator or liquidation process to the company for winding up. So the creditors mostly employ liquidators to take their money, either forcefully or by law. And after that, the proceeds are allowed to the company to be shared among the ordinary shareholders. So the administration of liquidation and bankruptcy, which speaks to an alternative to winding up for insolvent companies to trade out of difficulties and continue their business. So, for example, in the UK, there's a chapter 11 on bankruptcy, which speaks to the insolvent practitioner runs the company to return to its profitability. So, it's possible to administer a company as a winding up company, but if they are able to transact and run as a going concern and they can come back to profitability, they can continue as a going concern. So there's a provision based on the UK administration on this bankruptcy that could help the company return to profitability. Okay, so that's it about liquidation and bankruptcy very briefly. Do you have any questions on that? Okay, so we're done with the topic audit-related services. So before moving to the next chapter, we need to be able to understand the objectives of conducting review engagements in accordance with international standards on review engagements 2400 and 2410. Also describe the objectives and conduct of related services engagements in accordance with international standards on review services 4400 and 4410. We also need to validate the fact that discussed when an investigation is necessary and the stages involved. We've also explained the basis of liquidation, principles of liquidation and bankruptcy, and that should help us be able to pen down something and understand what the processes are in real exam world and also practical applications in our endeavors. Okay. So that's it for audit-related services. Can we go through our quiz? We are usually quiet. I hope we are not sleeping. Are you there, Rufiat? Julie, you're not muted, but you're still not speaking. I hope you didn't doze off a bit. You sounded tired. Julie, are you there?
I'm here.
Oh, okay.
Yeah.
Oh, okay. Because it's Judgment Day now. This is my time to smile. I don't want you people to go.
I'm just listening now. Hey.
No 100 though, Rufiat, no 100. No 100. You have to do giveaway. You have to do giveaway.
No,
Don't be stingy.
Don't give away. No giveaway at all.
Don't be stingy.
No giveaway. 100
Giveaway. I agree. Not the 100.
So you people no one agree for lecturer today. Okay.
No good for anybody.
Okay, we shall see. If not, I will forcefully take my giveaway. 60%, 100%, 80% is okay, but you people are Oliver Twist.
Not allowed that.
Okay, let's see. All right, number 1. What is the level of assurance in a compilation? So I have R on the, no, let me start with J, then I have R on the call. 1, 2, 3, 4, 5. What is the level of assurance in the compilation? D, none.
Don't stress yourself. The answer is D.
D, none.
Yes.
Okay. See the level of confidence. All right. D is Julia. Are you consenting to that, or you have a?
There's no assurance for compilation.
You agree to?
Yes.
Okay. We will see on judgment day. J, D, R, D. All right. Number 2, what sort of assurance is provided in engagement to review historical financial statements? Positive assurance, limited assurance, high level of assurance, no assurance. For financial statement, what sort of assurance is provided in engagement to review historical financial statements? Positive assurance, limited
high
assurance.
Level of assurance. Let's see.
Okay, J is picking C. R, what's your pick?
High level of assurance.
Your financial statements are always historical now. There's no future financial statements. It's not.
Okay, we'll see on government day, on judgment day. You guys are so confident today. Number 3, performing. Okay, let me go back. Somebody wants to change her mind.
What sort of assurance?
What sort of assurance is provided in engagement to review historical financial statements? High level, positive, limited, no assurance. I shall know I'll get 1 or 2 giveaway today. I know. Are you done? I should move to the next, or I should still
review.
Review.
Yes.
Review.
Don't let us
review.
Let's not that.
It's not that.
People are ganging up not to do giveaway.
It is not review. It is not CEO to review.
People will not gang. You are ganging up.
It's limited.
Limited. Moderate
assurance.
Limited.
Okay, they have changed
limited. Review.
So you are doing.
It's auditing. It's auditing that is high level.
You see that review, Gongo.
Yeah. Thank God you open our eyes. It's
people are doing. They are doing group assignment. Okay, group assignment, no problem.
Assurance. Oh yeah.
Women supporting women, no wahala. Yeah. Performing a tax calculation for a client is a attestation. All right.
Don't bother to read.
I'm in trouble today. Jay, you have a departing opinion. Jay, you have to have a mind of your own. Don't mind Rufiat. Rufiat is out for me today.
Rufiat has read. I'm very sure about that. And I'm very glad she has.
Okay.
Performing a tax calculation for a client is, of course, it's compilation engagement.
Hey. She's joining her sister. Okay, no.
It is real now. It's sure.
No, Number 4, which of the following statement is correct? I think I'll get giveaway here. When a company negotiates a friendly takeover, it usually appoints a firm of accountants to carry out due diligence on the target takeover. Number B, in an attestation engagement, the accountant is required to report on the quality of work performed. C, in a review engagement, evidence is gathered mainly by means of computation and inspection. D, in an engagement to review financial statements, the amount of work required is the same as for an audit. Which of the following statements is correct? Yes, you can see nobody's talking now, so I have prospect of getting something.
You're reading it.
Okay, let me read it again. Sir. Which of the following statements is correct?
Don't worry. Don't bother to read it. Let's look.
So when you review it, you just confuse us. We can't concentrate.
Yes, okay. Wait. Let's concentrate.
I will read it for you people. All right, go ahead. Me, I know I will get my giveaway. I know. I know. You have 60, 80. People still want to jump to 100. Haba. It's too much now. So your lane stay between 60, 80. I don't have problem. 100? No. Because ICAN will call you back. They will call you back to come and rewrite the paper. How did you score 100 over 100? So I must avoid that. So 60 minimum, 80 maximum.
Yeah, you're still talking so that he will be confused.
Okay, shh. I've shush. I like this number 4. Which of the following statement is correct?
All of the above.
No, there's no all of the above. No option E. So you must take between A, B, C, D. Just admit and do give away for the teacher now. But it will fair to go down. Go down. They are quiet. This question is tough.
That A, I'm looking at A.
I said A.
Due diligence. I'm looking at A.
Okay, both of them. Are you both agreeing with A? Are you both agreeing?
I said A.
Okay. Rufiat, are you consenting with your sister, your partner in?
We'll go for A. Go for A.
Like in ganging up against the tutor, no problem.
600 is shaking, no while.
It's shaking, it has to shake. It has to shake. And finally, for companies required to produce interim financial statements, IFIs, and have an annual statutory audit, which of the following scenarios will be most likely to occur? Yes. One firm audits the interim financial information, and a different firm audits the financial statement for the year as a whole. B, the same firm audits both the interim financial information and the financial statements and for the year as a whole. C, one firm reviews the interim financial information and a different firm reviews the financial statements for the year as a whole. D, the same firm reviews the interim financial information and audits the financial statements for the year as a whole. For companies required to produce interim financial statements and have an annual statutory audit, which of the following scenarios will be most likely to occur? This one too is tricky. I like what Rufiat has admitted, that the 100% is shaking. It's standing on one leg stool. So just take your 60%, stay on your lane, and I will celebrate you. 60, 80. That range. Yeah. Both of us are happy.
The answer is D.
Same firm reviews the IFI and audits the financial statement for the whole year. And Rufiat is going for D. All right.
My 100.
Me too. Have mercy. I must have something. Jay, what's your pick?
I want my 100.
Your target is too ambitious. 100%.
What's D? D is the answer. D.
Wow. You guys virtually picked almost the same options virtually. This is copy, and I don't like it. I'll seize your paper.
It's real. It's D.
I'll seize your paper in the exam hall and I'll tear it to you.
You know when something is clear.
Okay.
Because I looked at B and I was looking at the difference between B and D, and I saw that you can't audit IFI. It's review, and that's the difference. It has to be the same firm, likely. Okay. The same firm.
So that doesn't downplay the fact that both of you are on the same page, ganging up against me, but no problem. I'll forcefully get my giveaway.
Go against you to carry 100.
Yes, no, you can't get 100. Let's go to judgment day. Number 1, yay, D. Both of them, they have gotten 1. Let me even go back to the question and see. What is the level of assurance in a compilation? None. Wow. We're so sharp on that. No assurance is provided in a compilation engagement. The accountant compiles the financial statements from the information provided to him, but he does not review or audit those statements. Good one. My name is coming. I will smile.
Next.
Hey, number 2, Modano. Yeah. Number 2, B. Let me go back again. These people. And they took a wrong option. They took a wrong option and they went back.
Wow. We are there.
What sort of assurance is provided in engagement to review historical financial statements?
Yes.
Wow. B. limited assurance. Rufiat, Shora, do you know the meaning of Shora? Rufiat, be careful.
Is that review? Okay. Is that review? That review. I say,
that review. Exactly.
Review, Rufiat, be very careful. I don't like you are spoiling. I'm putting sand in my garden. Be very careful.
Rufiat did well. Her eyes were open.
Julie is a very nice person. She used to consider my feelings. You don't consider my feelings. Okay. No, it's not that you are a Dundee. You always pass or used to consider me with 1 or 2 giveaway, you know. Okay. Rufia just came up with one. Yay. Number 3, C. Now, wow. These people are serious.
Hey!
Now, wow. Performing the tax calculation is...
Let's go there. Let's go there.
This one is easy. Performing the tax calculation for a client is a compilation engagement. But 4 and 5, I'm hopeful.
No way.
Let me see. Number 4. Yeah, Modaro. Hey, voila, there's problem. Oh, these people, I've gotten 80%. We go back again. Which of the
following attestation?
Which of
the meaning of attestation?
Which of the following statements is correct? Now, wow.
Due diligence.
Yeah. When a company negotiates a friendly takeover, it usually appoints a firm of accountants to carry out due diligence on the takeover. Wow. I'm even afraid of you people now. 4.
Correct.
It's not case study, it's AAA. I can't even open number 5. And let me read it now. In an attestation engagement, the accountant is required to report that certain procedures have been performed, but not to report on its quality. Okay. In a review engagement, evidence is gathered mainly by means of inquiry and analytical procedure. Wow. In an engagement,
you don't win. You have to give us gift too. You don't win.
There's remaining one. Calm down. There's remaining one. Calm down.
That one is a walkover. Number 5 is a walkover.
Chai, the amount of work is less than for an audit because the required level of assurance is lower. Okay. Hey, they got 100 over 100. These people are wicked. These people are very wicked. Rufiat is the ring leader. Rufiat, you are the ring leader of this.
We don't win. We don't win.